Hi, everyone. I'm Frank Mallicoat. I'm a news anchor and a reporter for KTVU Fox 2 here in the San Francisco Bay Area. My guest is a family wealth advisor. He works with Morgan Stanley. He's here to talk about our economy, jobs, and oh, yeah, we've got an election coming up in 102 days for president in our COVID-19 world. Let's say hi to George Noceti, a good friend of KTVU. George, how are you?
Hello, Frank. Good to see you.
Good to see you as well. Let's start with the unemployment claims, George. They came out today, and for the first time in several months, they actually went up. Just your reaction.
Well, first time in 4 months, it jumped higher than it had. So we see a little trend up, and that's essentially due to the blip of coronavirus, that ugly little thing that keeps happening. We're actually we're moving north on that instead of moving south on the number of cases and the number of deaths, unfortunately, in the United States. So that's caused a retraction, a little slowdown of people getting back to work. And so the unemployment claim is up. You know, we have about 160 million people in the workforce, and that means that 1 out of 5 people are unemployed.
In the midst of all this, the stimulus bill has been kind of shelved, at least for a few days anyways. I would imagine they're going to get back on it next week before that deadline, August the 1st. But, you know, there's a lot of people out there unemployed that need that $600 stimulus money each week.
Right.
I've got some family members. What do you think is going to happen there?
Well, the stimulus bill was really needed. It added another $600, as you mentioned, on top of what people would normally get here in California. So all in, people could be getting about $1,000 a week, maybe $4,000 a month. And some people felt that that's been a disincentive to get people back to work. But the bottom line, this virus isn't anybody's fault. It was very disruptive. And the generous stimulus to keep people abroad, it's what I call disruption insurance, keep people bridged until we get people back to work, I think has been really needed. And so now, whether or not it's going to be extended has become a political problem. It's moved from a healthcare problem to a financial problem, to a political problem. That's being debated right now between the House and the Senate. And I think what'll probably happen, because this bill's become very complicated, there'll probably be a side bill generated that'll just be dedicated to some salary continuation for people. And it's a lot of people. It's 30 million people. And when they get that money, they put it back into the economy. And that's helped to really move our economy forward in the past few months also.
I was going to say, if it weren't for that, we'd be in big trouble, don't you think?
Oh, yeah, exactly. Exactly. We've been in a recession, it's 2 negative quarters, and now we're in a V-shaped type recovery because we've created, more new jobs. People are starting to spend more now. Retail sales are up. Car sales are up. We just got the housing report on Wednesday, and more new homes have been sold this month and last month. So there's been just a bulk of people and pent-up demand to go out and buy things, and that's what we're seeing right now that is helping to stimulate this economy, given we still have a lot of problems and issues.
And in the midst of all this, there is kind of a silver lining per se, because a lot of folks are working from home. You're at home right now. I'm at home working for a TV station. And that's kind of loosened up the housing market a little bit, because you don't necessarily have to live where you work anymore. And that's got to be a good thing, right?
Exactly, Frank. This COVID-19 has been terrible, right? It's created so much chaos, but we always look for that silver lining. And what I have noticed to be happening now is, especially right here in the San Francisco Bay Area, one of the big issues before COVID-19 has been affordable housing. And the San Francisco Bay Area has been a magnet for these jobs that pay 6 figures. Problem is, you get these technical people coming in for these thousands and thousands of jobs that pay really good money, but they can't buy a home here. Post-COVID-19, what's happening is it's been a forced experiment, and you and I and many others have had to work from home. And we found out we can do it. And our employers have found out that they can track us because we're online. They know how many minutes we're on our computer, how many calls we make. They can regulate all that. So I think we're going to see a little shift here where people that want to get these big jobs in the San Francisco Bay Area but can't afford homes, they can live in the Central Valley. They can live in Sacramento. They can now find affordable housing and still get these great jobs. That's going to help those individuals, and it's going to help the tech firms who really rely on these people to work for them.
And in the midst of all this, too, real estate, especially here in the Bay Area, it's kind of held its own. In fact, I got a good friend. She put her house on the market in Martinez. got 7 offers, all over asking,
Exactly.
and off she goes. So that's kind of held despite what we're in.
Yeah, well, we've had another report come out this morning, and that was new housing starts.
Mhm.
And that increased dramatically also. So that means that more permits are being pulled, more homes are being built, and but still, we only have about 4 months of inventory. So it takes about 6 months of inventory in the United States in order for prices to start to come down. So prices are still pretty high, and that's dramatically increased also, even though we're in this recovery from a recession.
Let's talk about the election. 102 days from today, November the 3rd, we'll be
Right,
going to the polls to vote for president,
right.
Congress, among other things here on the local level. Certainly, it's going to be an unusual race to the finish because of COVID-19. Mr. Trump, he can't have his big rallies. Joe Biden's a little behind in terms of
Right,
social media.
right.
I know you don't have a crystal ball, but how do you think this is all going to play out? And how will it affect the market one way or the other?
Right. Well, you're spot on. This election will be unlike any other election. Typical elections, you hold big rallies, you take selfies, you kiss babies,
Right.
you're out there pounding the flush, you're traveling from state to state, from county to county with your team, getting visibility. The Democratic candidate, Joe Biden, has very little visibility during this COVID-19. He's been trying to campaign from his basement. And Donald Trump, um, both names are very well known, of course. You know, we know who both these candidates are. But Donald Trump has been wanting to have rallies. His last one failed because people are just afraid to come out. Confidence about this virus and it affecting you is really, really low. Confidence is low. So this campaign is unlike any other. Now, Donald Trump has raised close to $1 billion and has spent about $500 million thus far in his campaigning. And Joe Biden has really lagged behind Trump, except for the past month, because his poll numbers have really increased. And so he's gotten a phenomenal amount of money. And this is where you're seeing a lot of advertising on social media. Now, Trump, on the other hand, really beats everybody in terms of social media. He has, 4 times more followers on Twitter and Facebook than the candidate Joe Biden has. So it's going to be a really interesting election. And as we go forward now, we're showing that Trump is trailing in the polls by a significant amount. Will that continue? Well, we got about another 3.5 months. And I think August 1, we're going to see a lot more visibility from the candidates talking about the election.
Yeah, once they ramp it up because it's growing here, and don't forget a number of House seats and Senate seats up for grabs,
Exactly.
and that's going to have implications on taxes both at the federal and the local level.
It's going to be interesting because on the Senate side, a lot of seats are up, but we really expect the Democrats to hold. On the House side, we have a lot of seats up, and we expect the Democrats to really, gain some seats in the House. On the Senate side, it's a little different. It's a smaller group, and there's only about 10 seats available, which is a lot. And usually, when there's an election, we see a seat change of about 3.4 seats, going either Republican or Democrat or split. And our expectation is that the Republicans will still probably hold the House. The Democrats will probably gain 2 more seats, but not enough for a majority. But all bets are off when people go to that voting booth and actually cast their ballots. During the primary, we saw that the Democrats really didn't come out full force in the primary elections. And so for the Democrats to win, they need to come out and vote. You've got the Democrat side, the Republican side, and in the middle you have the independents. And the independents have been trending a little bit more towards the Democratic side, and they're the swing voters. So we're going to see how all that's going to play out. But a lot of time, 3 months seems very short, but a lot's going to happen between that. And the president, as you know, has really, based his case on the economy, which hasn't done well recently, and that's because of COVID-19. And so there's not a plus there. Handling of the healthcare issue, he hasn't gotten positive response on that. Stock market, though, if you look at all the presidents prior to COVID-19, you measure all the presidents, same time frame, market has done well under this president. But the president always doesn't determine how the market's doing.
Yeah. How big of an effect does a presidential race, one way or the other, does it affect the market in a big way historically?
We follow this statistically, and at the end of the day, it really doesn't matter. The market would prefer to have a mix of Senate and House, Democrat, Republican. If there's a sweep on a Democratic president, Democratic House, Democratic Senate, if that happens, market generally doesn't like that. It doesn't like uncertainty.
Mhm.
But once everything settles out, it's really the economy and all the numbers in our economy that really makes a difference. A president can have influence certainly on regulation. It can have, influence on how much money is in the economy to stimulate it. But we also have two other parts of our democratic process that are really, hedges against what happens going
Well,
forward.
well, let's move on to your true expertise. Get you out of politics and get you over to finance.
Sure.
I've said it before. You don't have a crystal ball, but is it a bit of a head scratcher? How far we've come, how far we've dropped from those days in March to June, July, and here we are pushing for August. Nasdaq has recovered; it's now in the green.
Right.
The other markets are certainly heading that direction. It used to, years ago, there was a cause and an effect, and now all bets
Yeah.
are off. It seems like, right?
Well, it is a head scratcher, Frank, because people confuse the economy and the stock market. They're really two different things.
Mhm.
The economy is backward looking, what happened yesterday. The stock market looks forward on what it thinks is going to happen. Now, if you remember 2008 when the market tanked, it took us about 4 years to really get back to a recovery. This recovery is going to be a lot quicker because the consumers were better prepared. We had less debt, we had more savings. In fact, during the past 4 months during COVID-19, people have been able to spend money, so our savings rate is way up there.
Mhm.
So we're better prepared to deal with this recession and get to recovery. The market thinks we're going to find a solution for COVID-19. It thinks that we're going to be able to manage it, even though right now there's problems, but we're getting more PPE out there. For the pharmaceuticals, it's a big play for those individuals that come up with a vaccine because literally their market is 1 billion people out there who would benefit from this vaccine.
Billion, yeah. Oh my
A
goodness.
billion, yeah. I mean, it's
Yeah.
just huge. And also, don't discount the Federal Reserve. They're in charge of the monetary system. They have come out in full force. They have promised to back this. It's like an insurance policy.
Hmm.
And that just buys time for us to come back. And because we started off in pretty good shape prior to COVID-19, our recovery will be shorter. While you're in it, it's painful, it's difficult. Some of our favorite stores are going to close down, but others are going to open up. It's going to create opportunities in the healthcare area. This telemedicine thing now, Frank, is a big deal.
Right.
If you live in the Valley and you want the best doctor, you've been precluded from getting them because you can't travel into the Bay Area. But now you can do a video on the computer with your favorite doctor who works for one of the teaching hospitals. And now doctors can now actually charge for that. Medicare will pay for the telecommuting opportunities and appointments, whereas before they didn't. So it could democratize healthcare. It could lower the cost of healthcare out into the future. So we're going to see a lot of sea changes on what's happening. COVID-19 has a big overlay on this.
I can only imagine the day a vaccine comes out,
Yeah.
what the market would be like.
It's already built that in, and that's why you're seeing it. Yeah, it's already built it in, even though it's not defined yet. And so, the government's put a bunch of money into some of the companies. Companies have put a lot of money into. Somebody's going to come up with not a full-on solution, but a partial solution. There'll be various vaccines out there, but it'll be a corrective action going forward, and that will really drive the market because a lot of our other economic indicators are pretty strong. Building more houses, getting more permits, more savings, and we'll get those jobs back too. Not going to happen right away. Probably get back to the 2019 at the end of 2021 or pretty close to that.
And finally, how about a message to a lot of Americans out there that have 401ks, most of which have recovered. Some still have some work to do. I guess slow and steady kind of wins the race when it comes to this in terms of a rebound and moving forward.
Anybody that got out of their 401k at the end of March when the market tanked made a big mistake.
Yeah.
And that is because they could have, the days and weeks after that, they could have bought very, very low. That's what we're supposed to do. Buy low, sell high. And so, anybody that has a 401k, you're doing this very sophisticated financial concept called dollar cost averaging. You're buying low one month, you're buying a little high the next month, you're getting an average. That's really what you want to do. You're doing it on a tax deferred basis. It's not short-term investing on the 401ks, it's long-term investing. So you take the good and the bad and you get an average. There's more good than bad over a long period of time. This recovery eventually will be good. Everybody will be benefiting from that. So double down on your 401k, continue to put money away. That's how you get ahead.
That's right. And I'm just going to throw you a baseball question because I know you're
Yeah.
a big fan. Are you glad it's back?
Oh, what else do we have to look for?
Nothing.
We love sports, and baseball's the best.
Yeah.
So it's great, but it's not as good as sitting in that seat, having a hot dog, and just talking to your friends while the game's going on, and maybe even catching a foul ball once in a while. We miss that.
But it's good to have something new on TV, something to root for, and picking up the Chronicle and actually having more than 2 pages of sport near and dear to my heart. That's for sure.
Yeah, we'd like some real-time sports, not the past sports. Exactly.
Well, George, all the best. Want to thank you. He's the family wealth advisor. He works for Morgan Stanley and a dear friend at KTVU. Some great insight, George. Have a great weekend, and thank you so much.
Thank you, Frank. Always good talking to you.
You too. All right. That's George Noceti. I'm Frank Mallicoat. This is coronavirusnow.com. Have a great day, everybody.